Welcome back for another top-notch video. This week, guys, we're going to be talking about the week of March 2nd through March 6th. As always, our channel is about TSP/stock Roth IRA funds. If you have a brokerage account or anything in TSP, this is the channel for you. We go over the CSI and F fund if you are in TSP, and we go over the ETFs if you are in Roth IRAs, over IVV, VXF, EFA, and AGG. With that being said, we go over each of these funds. We look at some of the analysis of each of the funds. We kind of go through what we think and where we're going to put our allocation for top notch, and then we also go into a technical analysis. If this is something that you like and enjoy, please like, subscribe, or share. We're going to start this week by going over what our move did for the month of March. So on 18th March, we got out of markets. We decided to put a little capital aside, kind of reserve that powder a little bit to see what would happen with markets. And on the end of basically February, we had a massive price drop, a correction in the markets. We decided on Top Notch Channel to get back into those markets on March 3rd. So we were entering the market on March 4th with our funds. So with that, we went from the C and S fund to the F fund on the 18th, and then back to the back from the C and S fund back on March 4th. What did that do for our funds and our markets? Basically, I have this right here. We gained over 10% on markets, guys. We were up 2% during this time. Basically, a little less than 2% since we had a little bit in the G fund there. But almost 2%, while markets dropped almost 10% in the C and S fund and 8% in the I fund. So we gained a significant amount over these funds. Did very, very well on the Top Notch channel. That is a great swing trade move. We are going to be sticking around for quite some time in these funds, because that's just going to rocket our gains up for the year, guys. Very, very impressive. That is just awesome. That was a great move for us in the Top Notch channel. Now with stock markets, we're going to go kind of over each of these and what happened for the week. So here we are, the week of March 7th, and what did we see this week, guys? A ton of volatility, okay? Markets were up and down over 1,000 points, numbers of time. We got in on a good day. We were up over 9% at one point. Now we're back below that. 9% for the year, that is. But overall, markets were just all over the place this week, guys. And for our channel, we are still beating the C, S, and I funds, so those equity funds. We're lagging the S fund, or the F fund, just a little bit, but still doing very, very well. We are positive for the year, where most funds are negative for the entire year. So we are doing very, very well. We're sitting at right around 4% for the year. I'll pull that up. So as you can see on my spreadsheet here, we are sitting at 4.16% for the year, while market funds are down 7% here for the C/IVV fund. VXF or S fund is down 10%. I fund is down 10%. So we are almost 15% above these two markets here, and good 10% above this one. We are lagging the F fund a little bit, but we fully expect to come and beat that out as markets work their way out in the future. That being said, where would you see ourselves on the charts? So with the charts this week, here is where we saw with basically March 2nd through, or the 1st of March, basically through the end of the week. So as you guys can see, huge volatility here. Spikes almost up to 4% a number of times. Crazy amount of percentage. We saw that spike on March 2nd, a massive gain, biggest gain in the Dow we've seen ever. And then we saw a drop down, and that's when we decided to go ahead and get in those markets. Got in right around this area here. And as you can see, markets did drop a little bit here, but overall, not a bad place to get in for the week. We're going to go over some analysis on some of our charts just to kind of show you guys some things, and then we'll do a technical analysis right after that. So with our analysis, one thing we want to mention with these giant spikes in volatility when we're looking at our charts is with the TSP, if you are a TSP user, you only get 2 moves per month. So if you make your 2 moves in the very first couple days of the month, you're only going to basically, you won't be able to move again. So you could get stuck in some fund that you do not want to get stuck in. So please keep that in mind, guys. 2 moves, and then the only moves you can make after that are to the G fund. Okay, so make sure you are executing your moves when you're supposed to and when you want to. That way you don't lose out on those shares, and you capitalize the most gain possible. Top Notch already made 1 move for the month. We're going to hold on to that second move for quite some time, and I'll bring that up in the topics that come up a little bit later on. But we don't want to burn a second move super early in the month. We like to make our second move around the middle of the month, kind of see where things are at, or we'll start to evap some of our capital away from those equity funds if funds drop off significantly. Typically that's more than about 3 to 5%. So we'll have to wait and see where that goes. So very, very interesting with that, with funds. Just keep that in mind. let's move to the next piece with that, which is the volatility index. Okay, like I mentioned, this week has been up and down extremely, guys. Huge moves in volatility throughout 2020 here in March. So what does that look like on context when we put that against the scale in a 30-year time period? So basically, since 1990, guys, we've seen this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, maybe 12 to 11 times we've seen the volatility index this high. It's an extremely spike. As you can see, we are coming probably to the end of our volatility spike here. There's not many cases that are much higher other than 2008. So we are getting very close to the end of this volatility spike. What happened at the end of these volatility spikes, and where are we going further from here now that we're here, now that we're invested in these funds in the Top Notch channel? What happened from here? Well, if we look at each one of these cases, so we have these cases up here, we put them on the chart perspective, and I got these charts from CiovaccoCapital channel, great YouTube channel. I definitely recommend you check them out. As you can see here, in each one of these cases, I put them up here. What happened with charts when we had a waterfall type like effect and when we broke below the 200-day moving average? A couple of these cases do not reflect the 2020 case. So our 2020 case, we had this waterfall kept and basically fell below the 200-day moving average. It looks a lot like some of these other cases. The ones that do not look like that are 2001, 2002, and 2008. That's because we were below the 200-day moving average, and then we had a waterfall-like effect. In 2001, 2002/2008, that's where our bear markets were. All these other cases, the percentage of our gains increased after a certain amount of time and months and patience. So through 1, 2, 3, 4, 5, 6, 7, and this will be case 8. 8 cases we saw, well, 7 cases we saw markets improve significantly. So if you're worried about the stock market, please keep that in mind. Historical wise, it's better to, after the plunge, to really see where things happen. And we'll wait and see where things are going to go. But overall, this looks like a very, very normal thing compared to some of these other waterfall effect paybacks that we've seen throughout the years. Okay, so the biggest ones that does not reflect is because of these ones here, as you can see, below that 200-day moving average. Very important, okay? So we're watching that 200-day moving average. Top Notch channel got in right around the 200-day moving average. That's a great buy-in point for us. That is awesome. We are very happy with that buy-in point. We're probably going to buy and hold and stay invested probably throughout the rest of the month. That being said, what happened after we broke that waterfall plunge? How much farther did markets move, and how long was the rally? How strong was the rally after the final low was made? So we don't think that this low that we had here is the final low. We'll probably see a retest or a little bit lower low with markets. So just keep that in mind. We look at all these cases and see, you know, did they make a second low? As you can see here, 1998 we did, 2001, 2002, 2008, 2010 I didn't really see that. So a couple of these cases we see another lower. How much lower can we go, and what happened next? So we took this based off March 5th data. As you can see, right about here is where we got in. The Top Notch channel got in. So right around this area. So just doing pretty well. Where can we see this go? We could probably see this drop back down and retest this low here, and that would be A-okay, guys. Moving on. So what happened after we had a rare spike in volatility, and what happened to the final low? So if we had a retest in our markets with all these cases, most of these cases did have a retest. I'm looking at the cases based off this volatility index here. Out of these cases, did we have a retest? Did these cases have a retest in our markets? Most of them did. We put that in a chart to show you guys exactly what the data said historically. We did not. Ciovacco channel did. So with that, with the VIX close, we saw the VIX close at a certain volatility, okay? We saw the S&P 500 hit a low later on to that low. Here's the dates here and what happened since then. So based off what we saw here to the low, lows typically take, or a retest, typically take about, based on all these cases, an average of 41 days or about 1 month. So 1 month from the lows that we saw in the end of February, we're looking at about 3 more weeks of correction consolidation, probably a couple. We could see markets drop a little bit lower, okay? About 41 days to see markets drop a little bit lower, but we got a great buy-in point. And what's the max capital that we saw drop out of all of these cases here? Well, we saw an average drop down about 3.65. So if we see things drop around a little over 5%, that would be concerning. But if we see our portfolio drop around another 3%, guys, we are not worried, okay? That's not a big thing to be worried about, because we know that based off of some of these other charts, markets, especially the markets above the 200-day moving average, historically wise, and we'll look to the data and the technical analysis, but we're expecting good things to happen by the end of the year, guys. And you can see that from basically off these lows here, when we retested the low or went a little bit lower, on average about 3.65%. 2 weeks after retesting that lower, about 41 days later, 2 weeks after that point, so about 1 month later, let's say we're in March now, so around April time frame, April 10th to 15th, 2 weeks after that, so that towards the end of April we saw an increase 2 weeks, 3 weeks, 1 month out. They were 100% positive every single time with pretty big gains here. The average gain, if we look at across all these cases back on this chart here, the average case gain about a month and a half later, guys, after we hit that final low, or about a month later after the low was reached, we saw an average gain of 5% 2 weeks out, an average gain of 6% out, 1 month out, 6% out, okay? Then typically what we saw after about 1 month out, 6 weeks to 2 months to 10 weeks out, we saw some givebacks in here. So we did see some givebacks, still 90% of the cases, 70% of the cases, 90% of the cases. So we'll definitely have some more moves in here with our TSP coming up. Like I mentioned, we only have those 2 moves. We'll be looking for those cases to hopefully capitalize on these 4% givebacks if there are any. But some of these cases didn't even give give anything back for the market. So just keep that in mind. And then if you look 6 months out, guys, 6 months out from, let's say, the April time frame, April-May time frame, 6 months out, we saw a credible 100% gain in the markets with an average gain of 13%. And then 1 year, if we were looking at March of 2021, a 1 year gain of almost 18%. Please keep your eyes on the long-term gains and not the short-term volatility spikes. Okay, it's really important to look into that. The media is going to try to blow it up every day because they make their money on how many people read their newspapers, and news is important to them. And the more people that read it, the more profit they make from it. So just expect to see craziness there with the news. But overall, guys, this is pretty good. We are allocated pretty well. We are set up to find that final low, and once we get that 2, 3 weeks, 1 month out, based off our funds being in equities, we're going to take that gain, whatever that might be, 5 to 7%. And then once we have that gain, we might draw it back just a little bit to see if we can't catch some of these numbers in here with our TSP Top Notch channel. Overall, we're sitting very well, allocated very well, feeling very good about our positions. So moving forward, how much farther could we see this volatility index increase, or where could we see our next low? With always, guys, I'm going to show you this in the technical analysis, but our next low we really think could come in the next month or 2 months-ish time frame, okay? And overall, I want to show this. I want to take an example of our last kind of volatility, our very similar 2015 volatility index increase when it was around the same point. So 2015 looks very similar to 2020, okay? So what did we see in regards to that? Well, we had something very similar. We had a market that dropped under that 200-day moving average, okay? Then we saw some consolidation for about 2 months in here where we had some consolidation like I mentioned, okay? We ended up getting above that 200-day moving average, then we saw a final low, okay? We retested those lows months later, and once we had that final low, then prices increased dramatically, okay? So this could be anywhere from this final drop we had in the end of February, anywhere from 2 months to kind of see some corrections in here, consolidation, and then seeing a final low maybe 3-4 months down the road, or maybe just a month down the road. If we look at those charts, that final low, some of those final lows were really, really quick, guys. As you can see, the 2015 one was one of our longest ones, almost 171 days. But most of these, 30 days out, you see that final low being made, which would be about next month. So we'll wait and see about that. We'll see where charts take us. But overall, if you made that final low 1, 2, 3 weeks, 4 months out, we start to see prices really start to increase and take off. So you don't want to sell your shares and stay out why some of this stuff is happening. Then 1, 2, 3 months out, we see that some of those give backs. But overall, if we kept our eye on the prize, 2 years later from this final low, we had a 57% gain in a 2-year time frame. That's incredible, guys. If I had a 57% increase in my portfolio, it would blow my mind. So right now on the top notch, we're somewhere right around here. We're right around this point, somewhere in here. We could see something similar to this. So just keep that in mind. Keep your eye on the prize. If you have questions, concerns, or comments, write them in the comments below. let's update you guys on coronavirus. So with coronavirus, this is what's affecting markets. This is what's moving markets right now. What are we seeing with the coronavirus? Okay, guys, we pulled this chart up from CiovaccoCapital channel on YouTube, and this seems to align pretty well with the data, guys. Okay, the virus began in China. China is most likely the market's template for what we can expect in other countries. I would agree with that, okay? So what did we see with China? We saw cases balloon in the first month, okay? First month of February, January, February, and March, we saw cases kind of balloon up to about 100K. But then after that, guys, they really just kind of maintained course. We didn't really see anything after 100K with China, okay? Those cases kind of were very similar. And look at this recovery, total recovered people. That's one thing the media does not report on. The media, wants to blow this out of the water so they get their ratings and whatnot, and it does affect stock markets, so keep that in mind. But overall, guys, 2 months, 3 months, a month or two, we can start to see cases start to level off by quite a bit, okay? This is the world, this yellow line here, and I think it could follow the trajectory of China just a much slower. So maybe, I would say maybe 1 to 2 months before we start to see this thing start topping off. Now, we don't know what will happen, but if we're using China as a template, that's a good data right there to see what we could do in regards to coronavirus. So, and another thing they just don't bring up is this total recovered, guys. This is getting very close to what this is, and that's only towards the middle or 1st of March. So 1 month, 2 months. I'm saying a month and a half, guys, and we can start to see the recovery for the rest of the world significantly increase. So I think the coronavirus is a little bit blown out of proportions in regards to stock, but it does move the markets, so therefore it is important to us. But we are feeling very comfortable where we're allocated in our funds. All right, that being said, let's move on to some other chart analysis. So we got this chart analysis from Grow My TSP, another really good website that you guys can check out. They have the 15-year monthly chart up here. As you can see, since 2009, how significant is this pullback? Guys, this pullback hasn't even come close to this massive trend line here. So we are doing very, very well in regards to this. We're not seeing anything like 2008 where there's this giant slow falling market here. We did see it tick that back in 2000 at the end of 2009 or 18, but then markets increased significantly. And honestly, guys, it's not a whole lot to be worried about right now. This is pretty small moving forward. If we look at it on a short-term time frame, I have some indicators here I want to show you as well. The RSI, as you can see, with some of these in the green here is when you want to be really careful and cautious with markets, because when you're in the green here, we can start to see some giant pullbacks here. We didn't really see one with the 2019 when we had it right before, but all in here, guys, we start to see some of these giant pullbacks when we're in the green, and when we're in the red, that's when we want to start thinking about buying. It's the opposite of charts. When things look terrible, that's when you want to start getting those bargains and start buying stocks. And we bought that right around this mid period here. As you can see, going all the way back to 2009, we haven't been in the red for quite some time. We are in this bull market. It's only touched this midline 1, 2, 3, 4 times, guys. So this would be the 5th time in maybe 10 years that we're at that line. So we bought at a very good point here. We feel very comfortable. We think markets could drop another 3 to 5%. We showed you based off our data that they could do that as well in the next month to find that low. And then after that, we expect charts to take off. Some of these indicators are rolling over, showing that we could go a little bit lower, which I definitely agree with. And then we'll have to wait and see from there. On a short-term basis, the C fund or IVV fund had some interesting things happen. Okay, so we weren't able to stay above that 200-day moving average, showing us that we're hoping for support in here, and that's why we bought in right on the second here when it got above that. We thought it might continue up. It did not. It resisted this 10-day moving average line, so keep that in mind. That's very interesting. But again, we bought at a very oversold time on a shorter-term basis. Very good time to pick up some stock when this is in the red. The time you don't want to pick this up is when it starts to get in the green or when it's very close here. You just want to be very cautious when it's in the green, watching your portfolio. We did pull back a little bit, and we did very, very well with that move. That being said, MACD is also very much our MACD line is under our moving percentage average line, and the markets are the oscillator here is coming out. The mountain is coming up, which is good. We did see a little increase here. We don't know how long that will last. We'll have to wait and see. The S fund or VXF with its funds also did not do very well. Never made that back the 200-day moving average, or yes, the 200-day moving average stayed below it. And we had resistance at the 10-day moving average, now moving below the 200-day moving average. Again, very oversold markets here. in the red. Usually doesn't last in the red for very long here, so we'll have to wait and see for RSI, but very good time to buy, pick up some shares, and go from there. Now, if markets were to drop anything more than 5-6%, we would go ahead and pull our portfolios back. Keep in mind that we are up still 4% for the year, so another 4 to 6% pullback would not put us down very far, guys. It would only put us down maybe negative 2% of the year. Much better than markets, which would be then at negative 15 or 20% for the year. So we are mitigating risk very well, waiting for those upsides and expecting good opportunities to come based off our portfolio. EFA, I don't really want to talk about. It's just a broken chart. Nothing significant to look at. I just don't think it's a place to be right now. So just keep your money out of EFA for right now. Those international markets, not very good. The last thing I want to look at is AGG or the F fund. Guys, the F fund has been increasing significantly. Since yields have been dropping, the F fund has just been blowing up. We were in the F fund earlier this month, and we really enjoyed where we were sitting with it. But we just think that this trend is just it's just a little bit unsustainable. If you look at this 10-day moving average, it can't even keep up with this price percentage up here. It's just exploding, guys. And if you look at these RSI, we are way in the green here. We want to maintain our portfolio. We want to minimize risk when we're up here in the green, because funds just continue to just blow up. So we ended up moving some of our funds from AGG back to the equity portfolio to see where that goes from there. But yeah, quite significant here, guys. Way above here. We think that we'll see probably this fund come back and hit this line at some point, just like it did back in February, but not just yet. And we'll be watching that as the markets move on. That's kind of our overall analysis of these funds. We're going to move into our technical analysis now. We'll make it quick for you guys, as we know you want to get out of here. So we'll just go into some of these things here. So for IYY, we look at IYY because it's a general market fund. It shows us all our indices, all of our funds, all our TSP funds. Everything is in the market. We like to look at this overall, kind of gauge where the market is going and what it is doing. One thing we like to look at with IYY, we have this line here from these lows back in August, September, and October here with a little increase. That's a positive thing here. We didn't hit a lower low here. You have to see if we'll test the lowest low here, which is this one here. But that would fall right in the area, guys, of where all this other support was. So honestly, like I mentioned, this is probably another 1% to 2% down. I wouldn't be surprised if we saw markets, like I mentioned on our charts, an average of 3% down when we see a correction or a market pullback when it's trying to find a bottom. But we bought in at a really good time, guys. We bought in right around here is where we bought in, and that was a decent time to buy in, honestly. It's not you're never going to time it just right, but we thought that this was a pretty good area to buy in. Bought in around this period here, and we're excited for where our stock funds are locked in for the month of March. And we're probably going to stay locked in for the entirety of March unless we see this move significantly lower down to like the 135 range. On a technical analysis for IYY, long-term basis, as you can see, charts are down. Like I mentioned, we see bars with the derivative oscillator, which are these down, or this red bar here coming down. Usually we typically see these from anywhere from 3 to 5 bars. And what can we base that on? We can base that on other historical falls that we've had. Some other historical falls that we have had in the markets. We had 2018, as you see here. It's kind of hard to see on the screen. We had 1, 2, 3, 4 bars there. And then we had 2000, at the end of 2018, a terrible plunge. And we had 1, 2, 3, 4 bars there. So we had 4 bars for the last 2 plunges. Where are we sitting now? We're at 3 bars now. We could probably see another 2 weeks of down bars around that. I would say maybe 2-3 weeks of down bars, and then really 1 to 2 more down bars. Market's dropping another 3 to 4%, and then picking up speed and finding that bottom and moving upward from there. So honestly, not a bad place to enter markets from a long-term basis. This is a great time to be back in those equity funds moving forward. On a 2-day scale, as you can see, not much improvement here. Our PPO line way below our moving average, and our derivative oscillator way in the negative. Like I mentioned, we usually like to get in markets around this time here. We jumped a little bit early. I'm okay with that. I'm all right that we jumped a little early. I wish we'd have got in this Friday than on Tuesday, but we got in when we got in, so we're going to stick it out. We only have 2 moves for that TSP fund. We're going to stay right put where we are. Part of the reason we did that on the March 2nd to the 3rd time frame is we saw this 4-hour chart, or the shortest term chart, start to turn out its way up. We saw that with the derivative oscillator. We saw, okay, we saw a PPO line increase. We thought for sure we were going to see that increase for quite some time, and then it started to cross and come down again. We don't have the moves in our portfolio to pull funds out, so we're going to sit it out, and we're going to let it sit. Like I mentioned, portfolio might drop 2 to 3% more before we start to see some of those increases, but we can take the risk. We have that risk. We are positive for the year. If we dropped another 3%, we would still be positive for the year. So we're doing okay in our portfolio for top notch. That is IYY. Moving on to IVV or the C Fund. C Fund, very similar. We are down below that 200-day moving average. Have not hit that basically the lower low there, or retest the low. Have some great support in here with that blue line and with our other line here. Moving averages are out of the question for right now, but we're probably looking for that lower low in the next month, 30 to 40 days before we start to see markets really start to increase. Again, like I showed with that technical analysis, that also supports our analysis that we could see markets drop another, I would say, 1 to 3%. Really good show on that. What are we looking at in regards to technical analysis for IVV or the C Fund on a weekly scale? As you can see, quite a significant drop here, like every other of our charts, okay, on a long-term basis. Again, 1, 2, 3 bars. We can see this drop for another 2 more bars before we start to see some improvement in our charts. Bollinger Bands, we're sitting right in the middle, so we're doing all right there. I don't really see this chart dropping too much more after another month or so. 2-day bar, we are still, our 2-day charts, basically midterm charts. With midterm charts, we are still way down here. We did close out on Friday, so we'll get a new one on Monday. We'll have to wait and see where things go. Probably see some more cases of corona over the weekend. Again, with the corona case affecting the markets and with China being the template of our markets, we could probably see another 2 to 3% drop in markets. Expect the volatility index to close out probably towards the end of this week, and we start making our way more towards forward progress. On a short-term basis for IVV or the C Fund, again, we bought in here when we saw this fund start to increase right around the March 2nd to 3rd time frame, and then because we can't predict markets, they decided to go back down again. Based off our long-term charts, like I mentioned, 2 to 3% more, up to 5% more, and we'll have to wait and see what happens with markets. But after that, we'll start mitigating our capital risk by pulling them out of those equity funds. But I don't think we'll get there, guys. We'll have to wait and see. Moving on to the S Fund or VXF. Massive plunge here with the S Fund, okay? Huge plunge here. We got in right around this time period here. It never made it back to the 200-day moving average. And then we ended up making a lower low here with the S Fund. So we did test that low there. So that made that low quickly, very quickly. So we could see an end of this very fast. We're seeing some support in here. Wait to see if that holds. If it takes another leg downward, we could be in trouble, and we'll have to start pulling our equity capital out of this fund. But overall, not worried where we're sitting at. Got in right around this point here. Got lots of ground to make up where we can make some positive things happen for VXF. On a long-term basis for VXF, where are we sitting at? Weekly charts. Big downward moves here. Price moving way down here. 2 bars here, so I'm saying another 2, maybe another 2 bars, another 2 weeks maybe. 2 to 4 weeks, like I mentioned, guys. I really think we'll see a bottom in 2 to 4 weeks with these charts. I'll hold my tongue closely because we don't know what markets will do, but based off historical examples, based off of what we see in the data, based off what we see with Corona, which is affecting the markets, 2 to 3 more weeks of what we'll see with these funds before we start to see a real bottom. We're happy where we're sitting at. We didn't get the bottom, but we got dang close to the bottom. On a 2-day chart or midterm basis, chart's still going way down here. PPO way below that line there. Derivative oscillator still real in the negative, going underground. We want to be in that where we start to see that start to flip around, but we have not seen that yet. Short-term basis for our chart, we did see that we're coming above ground here, got positive territory with our derivative oscillator, then we started to head back down here before we could get out of markets again. We don't have a whole lot of moves, so we're locking in these gains here, right around here. Locked all this in here, guys. A lot of stuff that we locked in by getting into markets right around this time period here, waiting to see where things will go. Moving on to EFA or International Markets, broken chart. Would not buy this at this time. This chart does not look as good as some of our other equity funds. I just stay away from EFA for right now. I'm not really a fan of it. We see some support way down here. As you can see, the 20-day moving average already moved below that 200-day moving average. Starting to see that bell curve start to roll over. I have to wait and see if that 50-day comes any lower than that. Moving on to the technical analysis of EFA, long-term basis, weekly chart is down. Seen a lot of negative bars here. 1, 2, 3, 4, 5 negative bars here. So we've been negative for quite some time. Waiting to see some turnover on the long-term chart, midterm charts. We did see a turnover right here on Friday a little bit, but we had a weekly fake out here. another massive plunge after we saw that in February. So big plunge there. It is also one of our funds that is doing the worst out of all of our TSP funds. So we are just not touching that for right now. We are staying away from that fund. On a mid-term basis or short-term basis, this fund is also on its way down. PPO line's about to cross, seeing a price start to head back down. Our derivative oscillator is starting to head down the mountain or go back underground. So when that oscillator comes negative, start to see price again move down. So we're not interested in EFA just at this time. That brings us to our last fund, which is AGG. AGG, like I showed you on our technical analysis, some of our other charts, this had some crazy consolidation in here before it just took off, okay? This is an incredible gain here for AGG. With AGG on the TSP funds, it's the F fund. I don't think I've ever seen a 1.4% gain. That is a crazy percent gain in that fund. A whole percentage gain for the F fund is pretty significant. That's because we saw the treasury yields way down, way down. That's going to mean that basically your mortgages and loan balances are interest rates are going to go down as well. And the Fed did cut rates this week, which is another interesting aspect to markets. We'll have to wait and see if they cut rates again on the 18th of March. That'll also probably push AGG higher. But for right now, this is where it sits. It looks overextended, guys. We're way above this line here. We're way above moving averages. We got to see some consolidation from these charts at some point. If we look at it from a technical analysis for AGG on a long-term basis, this chart is still way up here. We're seeing 1, 2, 3, 4, 5, 6, 7 bars up now of positive way coming up this mountain. What goes up the mountain eventually has to go down the mountain. So we're waiting to see what happens there. We are way outside the Bollinger Bands here. We didn't like where we were sitting last week, just how far outside the Bollinger Bands are. Usually when we're outside the Bollinger Bands, the market price can't breathe. It has to come back in and consolidate. We saw that back towards the beginning of February. And then we stayed in these Bollinger Bands for some time. Again, we are way out of Bollinger Bands again, so we're going to probably see some consolidation in the next couple of weeks with this chart. That's a long-term basis. On a mid-term basis, this chart just had a weekly fake out. Usually with weekly fake out, we see 1 or 2 to 5 bars. We saw 1, 2, 3, 4, 5, 6 bars. So we're probably getting close to the end of this fake out. Again, that aligns with just being so extended as well. So with AGG, PPO line is way above the price, the average line, and our derivative oscillator is moving way up here. Waiting to see when that consolidates just a little bit. Had quite some time there with the 2-day charts. On a 4-hour chart or short-term basis, we saw this market coming down and increase, and then we saw it come down, increase. We saw a fake out here, and then drop below, but the PPO line never dropped below here. Now we're starting to see that increase again. Kind of odd when you see that. We saw that with markets earlier this month before we saw that drop. Something we don't really like to see. That's kind of very odd behavior for the charts that we look at and the chart behavior we have. We don't really ever see that. Usually charts never really do that. It's very, very, very rare to see a negative derivative oscillator with no price percentage oscillator following suit. So we'll have to wait and see where this goes. We are out of AGG for just the moment, continuing on with our charts. All right, guys, really appreciate you if you made it through this entire video. You guys are champs. If you liked the content that we had here, please like, subscribe, or share. We'll show you our allocation for where we're sitting at and what we're doing. Again, Top Notch Channel is invested in equity funds. We're in the CNS fund. We got into these funds after the drop, okay? Did very, very well, like I mentioned, waiting for those funds to come back. We have new funds allocated to these, and we are locking in these gains when they come, when they decide to come, which should probably be a month or so from now, waiting for that chart to kind of show us where things will go. Please like, subscribe, or share, and like I said, write those comments down below. What do you think markets are going to do? That's my big question for you. What do you think markets are going to do in the next month? Do you think they're going to drop another 3%, 3 to 5% before we find our bottom, or do you think they're going to rocket back up? What do you guys think? I'm curious of your thoughts. So that's where we're sitting at. Again, I want to show this chart here of where we're sitting at. Huge returns for the Top Notch Channel. Gained, again, 10 to 11% on the CNS funds and over 10% on that I fund. Guys, we did very, very well with our swing trade. We are very happy where we sit. Yes, we are down for the month right now, but not as much as some of these other funds. We're down 1.5%, whereas markets for the month are close down to 10% for the S fund, 10% for the I fund, and 7% for the C fund. So we are doing just great. We are beating all these funds, and we're going to catch back up to that F fund probably in the next couple of weeks. Thanks again, guys. Really appreciate your time. That's another Top Notch video. We'll see you guys next time.